Hi, it's Adam Hewison coming to you live from the digital studios of MarketClub, and we have got a lot of news today. It's the 1 p.m. update for Thursday, the 7th of April, 2011. Well, let's start off with the interest rate hike in Europe just to kick off the day. An earthquake in Japan. Oil moves over $109 a barrel. The indices look a little wobbly on the news coming out of Japan. And also, there's still no budget for Washington, D.C. So all in all, lots of going on. But we rely on our trade triangles. This makes it easy for you to follow the markets and not get emotionally involved with them. That's the biggest account killer, is being emotionally involved. So let's take a look at what we have today. The first market I want to look at is the S&P 500. We have a 75 reading here. I'm going to click on here. That's our chart. We're looking, that was just, by the way, that was our portfolio manager we were looking at, and as you can see here, we had a little triangle at 1329 today. Now this is a daily trade triangle, so we don't put as much credence in the daily as we would in weekly. So, but let's look at what I tried to get at work. Yes, I actually didn't have the speaker on, that's why you couldn't hear it, but this is an audio summary of what we're saying right now on MarketClub.
While the major trend is still intact, the plus 75% reading suggests some further short-term weakness. However, this market remains an upward trend, and we expect to see it resume its trend soon. However, you should protect capital with tight money management stops.
Okay, there you heard what we're saying, but we've talked about this before. This is definitely a resistance level around here, and we're seeing this more and more. Look at these tight kind of doji lines that are occurring. Now, my concern today, if we close under 1330 on the Dow, on the S&P 500, that will certainly not be a good sign. I would expect to see some further weakness if that happens. But let's see how it plays out today. This market's been remarkably resilient. Could not barely say that. But it looks like we are going to see some, it just feels like something's going to happen there. So let's take everything off the screen, clear it up, and let's go to our next market. And that is going to be crude oil. Crude oil, as you know, we've been very, very bullish on crude oil. We're trading at 109.55. The high has been 109.63, and this is all in your portfolio manager. If you're a member of MarketClub, you have full access to these markets. Very simple to use. Click on a chart. You can analyze these markets on the fly, and look at this close. We're off to the races here. This market's not coming down, and I have to tell you, with the Bernankes of the world saying there's no inflation, they obviously don't fill their own gas tanks up, and they don't go to the supermarket to buy bread. But look at this market. It's a very strong trend. We've talked about this before. We've been bullish on this market for some time. As you can see, based on our crude oil, we're long from 86.21. The market's trading at 109.55, and we're long from 95.08 on the weeklies. And you see 109.55 and 105 on the dailies. So again, this trend is very strong, and you're looking at this level here. The market's broken up, and I would expect we'll go from 98 to 108. That's $10. I would think we're looking for 118 to 118. It's hard to write like this. Up to 120. That's what we're looking for. I think we'll see $1.20, $1.20 a barrel, or $120 a barrel, and obviously that's going to be a pain at the pump. So let's take this off the screen. Let's go to our next market. And our next market is our Reuters. This is the inflation index. I just wish the Bernankes of the world would actually watch this, because this tells you really what's going on. And here it is. It's the Reuters Jefferies CRB index. We talked about this before. The trend clearly is up. We've been long from 278.10 on our monthly trade triangles, and we're currently 369. By the way, we'll be talking more about this in our World Cup portfolio section tonight. We were up in the first quarter of 2011. Our World Cup portfolio was up about 30%. Now, annualized, that's over 120% a year. So we're off to a great start this year, and it looks to me like these markets are going to continue going up. Obviously, we've looked at the metal markets. The indices look like they're a little shaky, and I think there's a lot to be concerned about here. So let's just take this off the screen. And as you see, with our this is an interesting one. I'm going to show you this. This is a ProShares, and what this is a market. It's an ETF And what it means is when this ETF, this particular ETF, starts to go up, you can actually trade the short side of the market. And this is something that no one's really paid a lot of attention to. If this goes up, it means the market is going down, which means the people that run this fund are going to run into the futures markets, the options markets, to protect themselves with this. Now, this is the people that run the fund, so this is not just an average trader. So they may be moving millions of dollars into short positions in the futures, and this would be the S&P 500 in this case. This is what we're trading. The symbol is SH right here. And this is easy to do with MarketClub. It's in the portfolio, so you can see how it works. If this market closes around and makes that turn, hasn't done it yet, and I'm going to tell you, we'll listen to, let me just take this off the screen for a second. And let me just go to our talking charts.
The minus 85 score indicates that the downward trend is intact, and we are seeing a little counter trend rally. Look for the downtrend to resume.
Now let's see how that plays out, because this market's beginning to lose its downward momentum. And I'm going to scroll this down, you'll see, and hold on just one second. Let's just take everything off the screen and look at this market a little bit closer. So we'll clear it up and we'll go on here. And you can see that we're sort of flatlined here. Not to say I can't go lower, but certainly one should be very careful about really getting super long the equity markets right now, in my opinion, based on where we are, close to resistance, and that's where markets tend to reverse. And I think that we are way overdone on this market on the downside. So I think, again, I think you really want to be very, very careful about getting too excited. Close over 41, new highs today, 41.15. I would say chances are we're seeing the market top out. So let's see how this plays out for the rest of the day. This is Adam Hewison. I'm coming to you live from the studios of MarketClub, and we have an update tonight at 7 p.m. I hope you can all make it. We'll be talking about the markets we talked about, interest rates in Europe, the earthquake in Japan, how it's going to affect the supply chain, also the oil market, which is very, very strong. We'll see how that closes today. The indices, why they're running on empty, see how they close at 4 o'clock today. And also, we may actually have a budget in Washington, D.C. That would be quite a shock. So till 7 o'clock tonight, Eastern Standard Time, please join us for a free show. And also, if you'd like to tell your friends about this, we would really appreciate it. So Adam Hewison for MarketClub. It's 1 p.m. It's an update for Thursday, the 7th of April. I'll see you tonight at 7.